Good morning all, hope you're doing okay. You're having a nice weekend and you're enjoying the weather as well. It's very nice here in the UK. So we had the Euro USD buy signal, but what happened from the COT positioning perspective is that they actually didn't continue to buy, they actually shorted it. So we are currently undergoing some resistance from these highs, these peaks. So it looked like we had like a break of this channel. And you could probably argue we could be still within, some resistance here. If we broke above that, that would probably ensure, some proper bullishness from the Euro FX. However, they did short it, and the dollar is strong as well. It's not really going down at all. It's gradual and quite strong. Let's look at the yen. Gold also is interesting as well, so I'll show you that. Yen. And they actually did buy the yen, and that would probably agree with what we're seeing, because we're going to be probably risk off at the start of the week. We had the US yield inversion, and the 5 and the 10 had inverted, and so that's like a risk off recession warning. So it makes sense that this was bought because it's a safe haven. So we're still decidedly negative, but we're less negative, as you can see. Minus 91,000 compared to minus 110,000, so that was quite heavy, and we're coming off those lows. Let me just show you gold quickly, and we'll take gold off. Yeah, that's fine. So there's that little move there. It was very, very subtle, and we are strong really because we're way up there, and we are sort of making higher lows as well. This was a lower low, but we had a succession of support, so maybe bearish, because what's that level there? 172. Wow, we had that support, and this one is 175. So there's that 3,000 contract difference, which is not bearish. Had they have sold it more, we would have broken that support, and so that's a gold might be okay. Don't forget, we're very strong. From a COT perspective, that's actually really bullish. The big fish and the institutions are long on gold. Okay, so bear that in mind. So let's take gold off, and I'll show you the currencies. So let's take euro off. We'll show you pound. Pound was in free fall. And whether or not this is a legit bounce, I'm not sure. It could be that these are both fake. We are negative a lot, but we're less negative than the week prior. It's quite bearish. We really did fall. So there's the pound. So we haven't got any crosses imminent. We'll take the pound off, and then we'll look at Aussie. Aussie was in free fall. Yeah, that's that big move last week, but it hasn't really done much. 48, 47, so it's really not moved much. It's still below the zero line. We might get an AJ short, potentially. If these two cross, that could be an AJ short. So there's the AJ buy there. So if these two cross, we'll get the sell. Look at Kiwi. And yeah, I mean, yeah, so it's bearish, isn't it? We're below zero. We made a lower low there, just about. It's almost sideways, really. There's nothing really to comment on Kiwi. Look at CAD. CAD's been very strong, and there's a big bounce there, and we might cross the zero line. It's quite choppy, and it doesn't look like CAD yen is going to cross. Let me take Kiwi off and yen back. Yes, we won't get a CAD yen cross, not for some time. That would have to be taken down, and then this would have to be taken up to get the cross. But yeah, that's quite strong, and we're possibly going to be, we'll probably be in positive territory on Friday, so that could be quite bullish for CAD. And then last but not least, I think we'll look at covered that. Yeah, that should be fine. We'll look at Swiss. And Swiss franc, it ticked up. But it's slap bang in between the two. And so not much to say about the Swiss really. So it doesn't have to be a long one. And just remember to trade safely. We're going to probably be quite risk off on Monday. It's going to be a lot of chop. And don't forget the sentiment was a sell on the S&P as well. So I could maybe just show you quickly. So I can do that. It won't take long. Once it loads. And so this is the reason for the selling that we saw on Friday. Of course, we had the inflation data, and the consumer sentiment data was at a record low. So that didn't really help matters. So obviously there are fundamental drivers for the S&P sell-in, but I'll show you the sentimental driver. And what's happened is that the retail guys have really did try and buy the dip on the S&P. There, you know, we crossed the 50% line there, all the way up here. So they went long, and you can follow the price action as I move my mouse. They bought the dip, so we fell. And then they bought the dip, so we fell. And they bought the dip, and it's probably going to continue to fall. So yeah, it's quite scary. So nice short video. Let me know if you want me to look at anything at all. I will not mind in the slightest, and I'm happy to help anytime. Just let me know. Have a good day and a nice weekend, and I'll speak to you soon.